Ladies and gentlemen, good day and welcome to Mitsu Chem Plast Limited Q3 FY26 results conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ganesh from Kirin Advisors Private Limited. Thank you, and over to you, sir.
Thank you. On behalf of Kirin Advisors, I welcome you all to the conference call of Mitsu Chem Plast Limited. From the management team, we have Mr. Manish Dedia, Managing Director and CFO, and Ms. Kashmira Dedia, Vice President, Finance and Accounts. With that, now I hand over the call to Mr. Manish Dedia for the opening remarks. Over to you, sir.
Thank you, Mr. Ganesh. Good afternoon, everyone. It is a pleasure to welcome all investors, analysts, and participants to the Mitsu Chem Plast Limited Q3 and 9 months FY2026 earnings conference call. We sincerely appreciate your continued support and interest in our company. Q3 FY26 reflects continued progress for Mitsu Chem Plast as we strengthen our operational capabilities and deepen relationships across domestic as well as global market. The company delivered strong improvement in profitability, reflecting disciplined execution and improving operational efficiencies. Mitsu Chem Plast today operates as an integrated blow and injection molding solution provider, serving industries such as industrial packaging, infrastructure, healthcare, and emergency handling equipment. Our three manufacturing facilities in Maharashtra, equipped with over 51 blow molding and 20 injection molding machines, provide installed capacity exceeding over 29,000 metric tons annually. Supported by strong in-house R&D testing capabilities, this enables us to consistently deliver quality products while responding efficiently to evolving customer requirements. Healthcare furniture components under our Furnastra brand continue to be a key growth driver, with rising acceptance across domestic and export markets. Participation in international exhibition and industry events continue to strengthen brand visibility and deepen engagement with global OEM partners. Our export business also continues to grow steadily, with Mitsu brand Furnastra currently exporting to more than 17 countries. Participation in global trade fairs has helped enhance brand recall and strengthen relationships with OEM customers across pharmaceutical, healthcare, chemical, and FMCG sectors, reinforcing Mitsu's position as a reliable long-term manufacturing partner. During the quarter, we progressed on key operational initiatives aimed at supporting future growth. The company undertook a capacity expansion that has added approximately 650 metric tons per annum, taking total installed capacity over 29,000 plus metric tons annually. This expansion is expected to improve production flexibility and responsiveness to customer demand. Sustainability and responsible manufacture remain central to our operation as we continue initiative focused on energy optimization, recycling, and water conservation, while gradually working towards reducing carbon and energy intensity across facilities. Beyond business performance, we remain committed to social impact through Mitsu Foundation, supporting initiatives in healthcare, sports, and community welfare, including eye care programs, cancer support, and promotion of sports talent, reflecting our commitment to long-term stakeholders' value creation. As we move ahead, our strategic focus remains on driving profitable and sustainable growth through innovation, operational excellence, and diversification, guided by our transformation pillars: healthcare furniture under Furnastra, packaging products, operational excellence, and data-driven marketing. We continue progressing towards our long-term objective of achieving 1,000 crore in annual revenue by FY 2028. Before concluding, I would like to thank our employees, customers, business partners, and shareholders for their continued trust and support. With this, I conclude my remarks, and now I request Ms. Kashmira Dedia to take you through the financial performance for the quarter and 9 months ended December 31, 2025.
Thank you, and good afternoon, everyone. I will now take you through the financial highlights for Q3 and 9 months FY 2026. For the third quarter of financial year 2026, Mitsu Chem Plast Limited reported steady growth in performance, supported by better operating efficiency and improved product mix. Total income for the quarter stood at rupees 8608.85 lakhs, reflecting a year-on-year growth of 6.92%. EBITDA increased significantly to rupees 954.45 lakhs, registering a growth of 73.35%, with EBITDA margin improving to 11.10%, reflecting expansion of 426 basis points compared to the same period of last year. Net profit for Q3 financial year 2026 stood at rupees 470.63 lakhs, up by 217.03% year-on-year, with net profit margin improving to 5.47%. Earnings per share for the quarter stood at rupees 3.47, higher by 218.35% compared to the corresponding quarter of the last year. Moving to the performance for 9 months, financial year 2026, total income stood at rupees 26,405.09 lakhs, reflecting a year-on-year growth of 8.94%. EBITDA for the period increased by 35.71% to rupees 2043.58 lakhs, with margin improving to 7.75%, reflecting expansion of 152 basis points year-on-year. Net profit for the 9-month period stood at rupees 790.13 lakhs, registering growth of 113.03%, with net profit margin improving to 3%. Earnings per share stood at ₹5.82, up by 110.11% compared to the previous year. This result reflects better sales realization and higher margins achieved during the quarter, supported by the company's continued focus on improving operational efficiency, optimizing costs, and enhancing product mix, despite a competitive operating environment. Going forward, we remain focused on strengthening margins, expanding exports, and scaling higher value-added segments, including healthcare furniture components under the Furnastra brand. That concludes my update on the financial performance. I would now request to open the floor for questions. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Singla from Oaklane Capital. Please go ahead.
Yeah, thank you for the opportunity. Sir, so my first question is that your EBITDA margins have moved up sharply year on year and also improved quarter on quarter. So what exactly drove this jump, and is this level sustainable going forward?
Yeah, thank you very much, Mr. Aditya ji. I think good question, but see, I think we are starving to get a lot of things here. As we said, operational efficiency, the better margin, the better sales realization, and the better purchasing. I think all together we are working right now. So we hope everything this continues for the further quarters as well.
And so, sir, like how should we think about a normal margin for Mitsu through the cycle? Like what EBITDA margin range do you believe is structurally achievable over the next 12 to 18 months?
So generally, I think 8 to 10% is a quite reasonable amount because we have a both mix commodity and niche item. So I think 8 to 10% is a quite accepted. But we are trying for the new innovation things and new things because we have also a niche product. So we always try to get more margin and more efficiency there. So I think 8 to 10% for your answer.
Okay. Thank you for answering that, sir. What were the key reasons for the lower margins in the last few quarters?
Yeah, there were many. So I think in the last call also I mentioned, Lenny. So the raw material prices, the better sales, sales realization. So all together mix, and we are trying to get we are adding a new customer every quarter, every month. So if some customers are not giving you better rates, so maybe we have to switch over to another customer. So I think these are the practice, but it takes a lot of time, and we are trying to do that.
Okay. Sir, can you share the current revenue mix for Q3 and 9 months across your key verticals?
So the niche item is around 16%, and the rest is 84% is my commodity like containers.
And within this mix, which vertical is currently has the highest margin and which has the lowest margin?
Yeah. So as I said, like 16 is contains of like furniture parts and other articles. So they have a little more marginable items compared to the containers.
And so do we plan to
Sorry
steadily
to interrupt
increase?
you, sir, but if you have a follow-up question, please rejoin the queue.
Okay. Thank you for answering that, sir. Yeah.
Thank you. Our next question comes from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello, good morning. Am I audible?
Yes.
Yeah, firstly, congratulations on the great set of margins that you've achieved in this quarter. Since you said that our reasonable range is around 8 to 10%, that we can assume our expectation to reach 1,000 crores in 2028, what sort of margins do you see achieve when we achieve that number of revenue?
No, I'm sorry. The last line, I think, after 1,000 crore, we got, I think, your voice got cut.
Sure. So in FY28, we are expecting 1,000 crore revenue. What sort of margins do you see on the EBITDA during that fiscal year?
Yeah. So see, basically, when I said this 8 to 10% is in the current scenario, but yes, definitely we are also trying to improve our EBITDA margin. In the industry, it looks like 8 to 15% margin. Because since 3-4 quarters, we are trying to get little better the margin, and I think we have achieved near to the 10%. But I expect a little more margin when we go for a larger turnover.
Correct.
For sure.
Correct. So the operational efficiency will also kick in to achieve this 1,000 crores. What sort of capacity expansion do you expect now going forward in FY27 to take place?
Okay. So if you must have seen, after 31st, so before 31st, we have already announced one. We are doing a little smaller. So as soon as, as the machines are coming, we are announcing on the website. So we have announced already two announcements. One is in November and one is in January. One is in January for capacity announcement.
And the total announcement of capacity expansion will be enough to fulfill the 1,000 crores?
No, obviously not.
Okay.
Obviously not. So, I think I said a very small thing. Even we have announced in January, we have announced Unit 4 also, so which will also have a addition to the capacity. It takes a lot of time to come. When we order the machine, it takes around 4 to 6 months. So, I think we are in the process of the expansion right now.
Okay. So any sort of number range given the capacity?
Your voice got...
Hello?
Sorry,
Hello?
The voice got disconnected. Yeah.
Yeah, hello.
Words are getting cut in between. If you can speak little louder and near to the mic.
Sure. Any sort of range you can give on the capacity that you need to achieve this 1,000 crores, is that possible?
Range means?
Currently we have close to 29,000 plus metric ton capacity. Maybe at 35,000 metric ton capacity we can achieve the 1,000 crores. Any number you can give on that?
Yeah, so approximately it will be double the capacity, definitely.
Double the capacity,
okay. Double the capacity.
And what sort of CapEx would be required to increase that, to get to that number of capacity?
Ma'am, we will announce, because we are yet to finalize many of the things, and we will announce, I think, in a piecemeal. As soon as we finalize and we get installed, we will announce.
Okay. No worries.
Yeah.
Makes sense. And the EBITDA margins, if you can give a differential between the niche product and the commodity, if that's possible. What sort of margins we earn on the niche side and on the commodity side?
So around the difference is around 5 to 7.
5 to 7%. And currently we have around 16% of sales on the niche product. So how do you see that expanding to reach that 1,000 crores? What sort of percentage do you expect from niche products going forward?
So we are expecting around 15 to 20% when we reach, although we were reaching 1,000 CR, we wanted to keep that niche item should be approximately 15 to 20%.
We are currently in that range, so nothing more that we can expect, or the niche products will
No. So as soon as we are expanding, in both these things. We are expanding into niche item, we are expanding into commodity item as well.
So we'll follow the same growth pattern, if that we can say.
Yes. But we will try to increase in the niche items because better margin.
Correct. Okay, and the export share for 3Q, what is the export share in our revenue currently?
So around 2.5%, because see, we have been exporting to 17 countries, because I think this is a capital item and it takes a lot of time to successfully pass from the customer. So we have already achieved that milestone, and now maybe the export will be generated once all. I think we have been achieved that milestone. Now I think the results will come.
Okay. And this export is majorly for the niche products, or also the commodities are being exported?
No, mostly niche.
Mostly niche. So do we have a better margins on the export side, and if you can give the differential between
little better than domestic.
Better also. Okay. And mostly these exports are in which continent, if we should mention that?
Europe, Canada, and Gulf.
Europe, Canada. Okay. Any guidance on the FY27 revenue you can mention, or we'll grow? How will we grow from 26 to 27?
So almost in the same range. Yeah, but because more focus right now we are doing on the profitability. So, yeah.
Yeah, thank you so much.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on their touchtone telephone. Our next question is from the line of Surbhi Vora, an individual investor. Please go ahead.
Hello.
Yes.
So my question is on pricing. How quickly are you able to pass through resin price increase to customers? And in rising resin cycles, how much margin compression do you typically see before the pricing catches up?
Hello, ma'am. Ma'am, it's echoing. Your voice is echoing and could not understand any of the words.
Now? Is it audible? Hello?
Yeah, maybe.
Okay. So I just wanted to ask you that on pricing, how quickly are you able to pass through resin price increases to customers? And in rising resin cycle, how much margin compression do you typically see before pricing catches up?
Wow, good question, ma'am. So, sometimes it takes a good time, and sometimes it is very, very quick. So, this due to a lot of fluctuation in the US dollar, the crude and everything, and market sentiment and everything. So the prices sometimes goes up, goes down also. But yeah, I think it takes little more time. Sometimes customers are not agreeing on to give the rates immediately. So it takes around sometimes more than a month.
Okay. So, what is the export potential over the next 2-3 years?
Yeah, it's a very good potential because see, as I said, we are exporting to the niche niche items, and it's a capital goods item, and we are now achieved one milestone that all that 17 countries have been all our export orders and everything has been successfully passed. So I think now we expect a huge jump in the export.
Okay. So can you also tell me, which export geographies are working best today?
So, ma'am, everything, for us, everything right now is a similar situation as like Europe and Gulf. But with the India-EU tie-up, so we expect a good demand, and they will maybe try to purchase from us then rather than other countries. I'm sure that the tax benefit and everything will take a little longer time, but at least they will start purchasing from India. So I hope the Europe will be the major chunk for us.
Okay. Thank you, sir, and wish you all the best.
Thank you.
Thank you. Our next question comes from the line of Avesh Chauhan, an individual investor. Please go ahead.
Sir, congratulations on great margins in this quarter.
Sir, can you speak loudly?
Sir, you sound
voice
good.
is not coming at all.
Hello. Am I audible now?
Now it's good.
Okay. So congratulations on great set of margins in this quarter. So my question is on sales growth target. I think our target of 1,000 crores, if we have to reach there in FY28 or even FY29, we'll require 35 to 40% CAGR. And historically, we have done, in last 5 years, I was saying that we have done something like 18-19% CAGR. So what new thing is happening that, that we are going to grow at a far faster rate than historicals?
Great question, sir. Thank you. So I'll tell you, see, obviously with our capacity, we have grown very slow in this. You must have heard we have announced our Unit 4 also recently. Very recently we announced, I think last week only, that we have inaugurated our Unit 4 plant. And also in the month of December also we bought land. So, all this plan is an expansion. So I think once we are freezing our plans, definitely we will announce step by step.
Yeah, sir, but in FY26, I'm seeing that we might end up doing something like 400 crores or something, and then we will be required to more than doubling in next 2 years. But our FY27 guidance is very much in line with that historical 20% run rate. So I'm still not able to understand the math whether we will have a very significant growth in FY28 or something.
Yeah. So I think, sir, your calculation is perfect, right? Yes, definitely. But there in plastics always we have to go with the major machinery. All the current plants are saturated right now, so we can't expand too much in the same premises. So obviously we have to go for expansion. Hence we have gone with the Unit 4, and now maybe very soon we will come up with a new plant as well.
Right, so that is on the production part. I am also concerned about the sales thing, that how our sales will ramp up so much that in next 2 years from 400 crores we reach that you do additional 600 crores of sales to reach 1,000 crores. So that on the sales
so we will
part,
not do immediately 600 crore, obviously. So I think it will be gradually. So I think Unit 4 has already started. Now we will see many of the things, and I think it will be gradually. But yes, we are very confident to achieve what milestone we have set for ourselves. And yes, there will be. See, we are also building up a team. We are also building up infrastructure. We are also building up the customer relationship. We are building many new customers, acquisition. So I think this is all together.
Okay, and we'll do again a rights issue to fund this capex. Unit 4.
As of today, we don't think so, but we never know how the things goes on.
Right. But sir, in terms of we have to build up a plant at Unit 4, and that to something with a potential of 500 crore sales. So I'm sure there will be a lot of capex requirements. So any thought process on that how we are looking to fund that?
Not as such, sir. But yeah, some of the plans are on the paper. So maybe once it is freezed and board approves, then we will announce this soon.
Right. Got it, sir. Sir, but I would just have one request that if you could guide on the sales part more thoroughly, it will be better. I actually think that we have very good potential. Our company is very good, and we have a potential to do maybe 1,000 crores, but maybe that FY28 guidance looks little unrealistic. So, sir, maybe if you could in the next quarter, if you could come up with more clearer path to that 1,000 crores.
We'll try to. I think it's a good suggestion, and we'll try to do that.
Thank you. Thanks a lot, sir, and all the best.
Yeah. Thank you.
Thank you. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Our next question comes from the line of Aradhya Nayak, an individual investor. Please go ahead.
Hello, am I audible?
Yes, ma'am.
Little louder.
Sir, actually, can you talk about your current customer base quality? Are orders largely repeat programs, or do you still depend meaningfully on spot business?
Okay. So, ma'am, basically in our industry, we do not have orders more than a month because the prices change every fortnightly. Hence, the orders are only for 1 month. But yes, see, we have I think out of our sales, I think my repeat orders are approximately more than 65 to 70% customers.
Okay. So, what is the current utilization level across your facilities?
Kashmina mein can say.
So around 65% for quarter 3, ma'am.
Okay. Sir, what is your current debt level and cost of borrowing, and how much leverage are you comfortable carrying while funding expansion?
So current debt level is around 63-64 crore, ma'am.
Okay.
Can you repeat your next question?
No, this is like my last question. Thank you and all the best.
Okay. Thank you.
Thank you. Our next question comes from the line of Moksh Ranka from Aurum Capital. Please go ahead.
Hello, sir. I wanted to understand what is the gross margin difference between your niche and commodity products, and who generally are the export customers?
As I mentioned last time also, so EBITDA margin is like, around 4 to 7% difference between the commodity and the niche product.
And the gross margin difference will be the same, or there's
Almost similar.
Okay. And who generally are the export customers?
Who means you? We can discuss the name.
Okay, but in the industry, right?
Yeah, they are a hospital bed manufacturer worldwide.
Oh, okay. So,
you are talking about local.
About the local.
Sorry.
No,
I
got that.
On export customers or local domestic customers, sir?
I got about the export. Could you give some more clarity on the local one as well?
So in local one, we have two product verticals, majorly industrial packaging, and the other is our infrastructure and hospital bed furniture. So in packaging industry, we serve to many industries, chemical, pharma, FMCG, pharmaceutical, many industries. So customer base is very wide in as far as the domestic customers are concerned.
Okay. And can you explain our working capital cycle? How is it like?
So in days, it is around 65 to 70 days.
Okay. The full working capital cycle. And can you give a breakup of the debtor day and receivable day? And
So our debtor days lies between 60 to 65 days, sir.
Okay, got it. That's it from my side. Thanks for all this. And just one more question. In a recent announcement, they have made that they're adding 900 metric ton of capacity. So is that the unit for capacity which we are speaking of?
Yes.
Sorry, what was the question?
In a recent announcement which we have made on 27 January to the stock exchange, we mentioned that we are adding a proposed capacity of 900 metric ton, which is quite low. I think our current is 29,000. So is this the whole unit for capacity, or there will be a much bigger capacity?
No. Just a start. So as I started, initially I mentioned, machinery takes a lot of time. So as soon as the machinery started coming, we are announcing.
Okay. And based on the current capacity, what is the maximum top line we can generate?
I think around 450 approximately.
Okay, so for to get to 1,000 crore turnover, you essentially have to double your gross block. So around 50 to 100 crore could be the approximate investment you might require. Is my understanding correct?
Not exactly. Yeah, because I think, yeah, but it is there is a change in that. So I mean, like, every time you don't have to go with the exact same thing. So I think we will focus morely on the machinery expansion side more, and I think maybe what do you call? So the amount, obviously we will definitely announce amounts and the plan also, as somebody recommended. We'll try to announce it by next quarter. Looks like.
Okay. Sorry. That's all from my side. Thank you for answering all my questions.
Thank you. Yeah.
Thank you. Our next question comes from the line of Sakshi Shinde from Shah Consultancy Limited. Please go ahead.
Hello.
Hello.
If someone is speaking, I'm not able to hear. Yes, ma'am. Little louder, please.
Yes. So I have a few questions, sir, with me. So the first is regarding the Funstar. In caps and closer and Funstar, what is your customer switching cost? Do you own the molds, or there long approvals, and what is the typical lock-in period once you get it into a program?
Okay. So in every business, I mean, like, every customer has a different this thing. So it's very difficult to bifurcate these things. But generally, when it is custom-made design, then definitely customer owns the mold, and the generally locking period is around 2 to 3 years.
Okay. And also, sir, is there any a regulation angle? Do you see any risks from stricter plastic EPR regulation, and how prepared is Mitsu on those regulations?
So Mitsu, from day one, Mitsu is already prepared with the EPR, and we are already supplying PCR to many of our customers. I think, if I'm not mistaken, we were among the first one to give PCR in entire range.
Mm-hmm. So one question, because ESG is now very hot as selling cake. So have any of your key customers started using ESG scorecard, supplier audit covering environment, labor safety, or compliance as a formal part of
most of the clients? Yes. Yeah. So most of the clients are adopting those standards, because we have around from our customer base approximately 15 to 16% are multinational companies, and around 40% is our they are limited companies, the large corporates, and obviously they are following many of the things, and if you can see our annual report, last 4 years we are already following ESG, BRSR, and whatever needed as of today, we are following all this.
Great, sir. Good to hear. And looking forward to an update. Thank you. Good day.
Thank you very much.
Thank you. Our next question comes from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Hello, sir. Thank you for the opportunity. Wanted to know what is the peak utilization levels that we can hit on our current capacities. If I heard you right earlier, you said utilization in Q3 FY26 is 65%.
So you want to understand how far we can go for the current capacity utilization, or
Yeah,
how far we have already done?
As in the number 85-90% utilization is possible, or we maxed out at 80%?
So the maximum 85% is industry standard. So you can go 85 to 90, not more than that. whatever your capacity utilization, capacity, you can go 85 to 90%, not more than that.
Right. And when you say, sir, that peak turnover possibility is 450 crores, so you are assuming current prices and the current product mix, right?
Yes.
Right. Okay. Yeah, that's all from my side. Thank you.
Thank you.
Thank you. Our next question comes from the line of Rujun Mishra, an individual investor. Please go ahead.
Hello. Hi, sir.
Yeah, hi.
Yes. Actually, my first question is, how do you see the competition evolving, especially...
Sir, your voice is not clear. Sir, your voice is not clear.
Yeah. So, my first question is, how do you see the competition evolving, especially from the imports and smaller regional players? So, where do you see our company has differentiated?
No, the competition is very good. I think we are seeing that we always try to differentiate with the competitors by service and by value addition to the customer. That's the only way, to be a differentiate with others.
Okay. Is there any customers globally are pushing recycled content and sustainability? So, are your customer asking for PCR or recycled content? Or can you supply without impacting margins?
Yeah, we are doing that right now.
Another question is, does our any customer concentration is?
One thing is louder and you can come in the range because most of the words are cracking.
Okay.
Your voice sounds too muffled, sir.
Is it fine now?
Yeah, right now it looks okay.
Okay. So, do you have any customer concentration risk, and what percentage of revenue do your top 5 to 10 customers contribute?
So, generally, I think our 80% business is with around 30 customers.
Okay. Come again, what did you say?
So,
80%?
our 80% business is approximately with around 30-35 customers.
Okay. 80% is... Okay, fine. And so your working capital, I can see that historically as a swing factor in the sector. So how our receivables and inventory is trending in Q3? Can we improve further?
Yes, sir. We are definitely trying day by day to increase the efficiency of our working capital.
Okay. So any approximation of numbers like what's our current CCC?
Current?
Cash conversion cycle.
It is 70 days, sir.
70 days. Okay. Okay, fine. I will get back in the queue for any further questions. Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on the touchtone telephone. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Mr. Ganesh from Kirin Advisors Private Limited for closing comments. Please go ahead.
Thank you everyone for joining the conference call of Mitsu Chem Plast Limited. If you have any further queries, you can write to us at research@kirinadvisors.com. Once again, thank you everyone for joining the conference.
Thank you.
Thank you.
On behalf of Kirin Advisors Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.